You don't fear the debt when you trust the asset. When I know the asset is going to pay off the debt, pay me, pay all the bills, no one would fear taking money to do that. You can't get ahead today without debt. All right, today's episode is all about how to go from single family investing, one, maybe even two units, all the way up to multifamily investing. Today, we're doing something a little special. We're bringing in a guest, someone who's actually a local real estate agent here in Michigan. His name's Evan Bassi. He's a mentorship client of mine. He owns a duplex. He's a client. He wants to learn how to get into multifamily. So we're here at the 100 unit and we're bringing you guys along with us because we want to have this conversation said, why not just record it so you guys can learn from it as well? Because we get a lot of people on the channel who are inspired by us buying 56 units, 100 units, 42 units, but they're like, hey, Tony, I'm just starting at a single family or a duplex. So we're bringing in a real life example, which is what we do. We don't just talk about theory. We bring in real life examples. Evan's got a duplex. He wants to get into multifamily. He's 24 years young, man. He's ahead of the game by most parts, which is where I want all of you guys to be. I wish I knew what I know now at 24. And as I just turned 34 yesterday at the time of filming this, what a better opportunity just to help you guys out. So Evan, welcome, man. Got some questions that we want to get to. So let's go, man. What do we got?
I guess the biggest thing with real estate, when I noticed was there's a moment in time where I recognized this is a great way for me to build wealth, not just for myself, my family, but future generations. Was there a moment in time where you had that, wow, real estate is definitely my calling?
It's a good question. And you're doing it right. So Evan's a real estate agent. And I've always said, if I didn't find my love of fitness and nutrition early on and how fitness and nutrition helped me go through losing my mother and the financial adversity we went through, man, I would have got my real estate license because it's a license to sell real estate and make an infinite amount of money. I mean, you're making multiple six figures a year selling real estate, right?
Yep.
24 years old. I wasn't making that as a personal trainer and dietitian. My best year of lifetime was making 90,000. Then I started my business. Then that business in my first year struggled like most new businesses. Then it started making a lot of money. It started making multiple six, then multiple seven figures a year. So it wasn't so much an epiphany of I love real estate. It was, I hate taxes. When you make a lot of money, you pay a lot in taxes. So real estate was a byproduct of I'm making money. How do I eliminate or reduce my taxes? And the only thing I saw from personal education and discovery and reading the books and all that was real estate. The ability and things we talked about on the channel, cost segregate, depreciation. Real estate was a way for me to keep earning income at a high level, but reduce my taxable income. So that's my advice for you and anyone out there. I feel like you probably see this too. People view real estate as a way to quit my job and never work again. So you recently turned a unit and upgraded a unit on your duplex. Just estimate cost of that. How much was that?
Correct. Yeah, it was around $5 to $6 grand, but I learned valuable lesson because not necessarily is the financial amount, but it cost me time. So what happened was after, buying the duplex from you, leases went great, tenants were smooth, everything was operating great. One unit on the right-hand side ended up buying a house, moved out. So it was an opportunity for me to be well, I can lease it out again quickly or go in there, update it, add some value to it. That way I can raise the rent, but also the value of the property.
So $5,000 to $6,000. But if Evan just was I bought a duplex, I'm quitting selling real estate. Yeah. What funded that $5,000 to $6,000? It wasn't the cash flow.
Absolutely not. No.
It was you selling real estate.
Correct.
Keep your main thing, guys. Get in a sales profession. If you love real estate, so I didn't love real estate. I loved being a dietitian and fitness professional. Real estate was a byproduct of that. Now I love it, but keep your main thing. Sell real estate to own real estate. Every real estate agent should sell real estate to own real estate. You make earned income that you bust your butt for. You trade your time for money for, which is what we all do. Then take that earned income, put it into an asset like an apartment building, like a duplex, like a fourplex, that when you're not working, that asset is working for you. That's the blueprint. You can't fund a $6,000 renovation by even call it $500 a month in cash flow. That's 10 months of cash flow, assuming nothing else goes wrong.
All right, Tony. So when I did my renovation on my duplex, what's a good ROI per unit that I should be looking to get?
I always relate it back to fitness. If you ask 10 fitness professionals, what's the best leg exercise? You're gonna get 10 different answers. Squats, lunges, deadlift, whatever. Dude, I keep it stupidly simple with real estate. I just look at, can I make $1 million on a deal? If I can make $1 million on a deal, I'm doing the deal. This deal, this 100 unit, we're gonna make a couple million. Now we have an investor on there too, so they're gonna make their big chunk of it. But when I was starting, I didn't have these formulas. With our brokerage, we'll get people back, what's the ARV and what's the percent? Dude, I just said, if every unit, one unit, so you own two units, if I can get $200 a month in cash flow from this with everything paid, the utilities, the maintenance and repairs, everything paid, I get $200 a month, $100 per unit in cash flow, I'm happy. because you're not going to get rich on 2 units. But you know what you are going to get on 2 units? Experience, a taste of cash flow. You're going to get depreciation, and you're going to get your start. Then as you scale up, you can progress to higher levels of returns. That's what kills most people. They're like, I need 10% cash on cash return. I'm like, bro, it's 2 units. You just got to get started sometimes. And most people don't realize on value add real estate, first year is probably a break even. So you're probably breaking even year 1 now. You've just put $6,000 into it.
Yeah, I'm just starting to make money now. Yeah.
But do you care?
No, it's the experience and what I've learned in the process is insane. So
do you now have confidence, you think, to go buy 6 units if it came
absolutely
available?
Yeah.
Would you have had the confidence to buy the 6 units if you didn't buy the 2 units first?
Not necessarily, no. Duplex definitely helped me with my, confidence.
Confidence comes from doing, guys. You don't get confidence from books and podcasts and YouTube. Like, you can learn from our experience on YouTube, but until you're sitting there with the paperwork and then sitting there with the tenants, view your first investments as just your getting started point. That leads to your later investments that can make you the big money.
So when it comes to, I know I'm at the duplex and then you're at hundreds of units, where is the competition when it comes to scaling up? For example, there's corporations, there's REITs. Do you see and come in competition with those companies a lot?
So when you're starting with small single family investments, 1 to 4 units, I would say even up to 10 units, you're essentially competing with mom and pop buyers. So your first time landlords like yourself, maybe a group of people, maybe like two buddies, what you deal with, because there's new levels, new devils. I bought from mom and pops and I bought from $1 billion groups. When you're dealing with mom and pop, in my experience, they're usually very forthcoming. They're very transparent, but they're just unorganized. This is going to be their financial records. It's going to be a crumpled piece of notebook paper with some coffee stains on it. You're going to ask for a rent roll. They might not have it. Like the DeWitt deal, that was a freaking mess. He didn't own a cell phone. He didn't own a copier. He didn't own a computer. So the agent who brokered that off market was running up there, scanning things, running back down. Nothing made sense. All the leases were expired, but it was 16 units. It was clean. He was pretty forthcoming on majority of things. So that's what you'll deal with there. The 56 unit we bought from a mom and pop. This 100 unit was from a large institutional group, $1 billion group. And the 42 unit that we should be closing on next week, that was the worst, man. That was worse than this. 4 managing partners. So when you bought from me, I was the decision maker. I'm dealing with 4 freaking decision makers. That means I need 4 yeses, 4 responses, right? The $1 billion group is more organized. You want a rent roll? They can give it to you like this. You want delinquency? They'll get to like this, but they're a little bit more savage. They're more sophisticated. Their patience is much more thin. They want non-refundable money. Like this 42 unit, they wanted me to go non-refundable on my EMD, which was $50,000 upon signing the contract. But they're like, that's what we do. So you're dealing with a more ruthless person. And if they smell you don't have your poop in a scoop, they're going to take advantage of you and they're going to rip you up and they'll probably just discard you. As for the mom and pop's they'll blow past deadlines, but they'll be okay if you blow past the deadline. Like here, they know your deadline's coming up for your due diligence. They're ready to take your EMD and bounce. I used to be like, mom and pop is so unorganized. I can't wait to get to the institutional. Now I'm like, I miss the mom and pop sometimes because they were just so easy to work with. But see, now your lender is going to be like, wow, they're so unorganized. You got to get the right lender to understand the story too of who you're buying from.
So I guess with the smaller single family, multifamily, duplexes, triplexes, starting to see multiple offers on some properties. Some properties you can get yearly offer. When it comes to say 20, 30, 40 unit, are they that vicious with their offers too? Are you seeing these corporations try to outbid you every second of the day?
You're dealing with a different subset of people, right? Most people, let's just call it 500 grand and under. Most people can buy that. A husband and wife can buy that. Someone can go get money from their aunt and uncle. 500 grand to $1 million, you're getting a smaller subset. I would say once you're 5 million and above, you're dealing with more like groups. This 100 unit was above 10 million. You're dealing predominantly with groups. Very rare to find an individual investor just doing that. So I bought everything off market, dude. So I'm fortunate. I don't really deal with a whole lot of competition, but there's a negative side to that. This group did not want to sell this 100 unit. I chased them down. Everyone wants off market. I've done 8 deals off market, soon to be 9 with this 42 unit. When you're not dealing with competition, the seller can just be like, this number, forget it. But if it's on the market, you have a motivated seller. If you don't have a motivated seller, man, it's an uphill battle. That's why everyone wants off market. Off market's not great. Like people all the time, like, can I buy your property? Sure. Offer me 30 million for this today. Sold. When Andrea was transitioning her brokerages, Evan sold a couple of our deals for us. Remember the 4-unit?
Oh yeah.
With the shitty foundation?
Yep.
I was like, Evan, get rid of it. I was like, bro, just get rid of it. So we were motivated. I don't know if I would tell you guys to chase off market deals, chase motivated sellers.
So owning real estate and scaling up, I'm sure you've had a lot of different situations with tenants and property management.
Yes.
What's the worst story or most exciting story you can share with us?
I am so blessed, man. I have a partner and a wife who is the yin to my yang. I'm a sales guy, dude. For a single guy not yet married, who you choose to marry is the most important decision you'll ever make in your business. I can't run the business. I can't work on the business and in the business. So I'm very blessed that my wife has handled the brunt of all that. And now we have a team outside. Now we've got Crystal running this building. We've got Raphael doing leasing. So we have a team now, but I do know she staked out units in the beginning that we had to evict people. She would sit there all day. She would, firm but fair altercations with people. She's bled for it, man. She's gotten dirty with it. But in the beginning, when we started our management company, like just to manage our own deals, we fired a third party company, took over. We had 87 units at that time. She had to figure it all out. Yeah. She got cussed out by people. She got screamed at by people. She got doors slammed on her face. Like she's dealt with that. I think the worst one was just, when she had to it was in Fenton. She had to go there and this was this family of people. Kids were throwing rocks at the building, damaging. She had to clear all that, clear their stuff out. She was dragging dressers out with them, 12-hour days. She did all that, man. But we wouldn't be here today if she didn't. Real estate is easy. People are hard. And if you're going to own real estate, you got to learn how to operate real estate. You can use a third-party company, but you'll always make more money when you do it yourself. My best advice is be firm, treat them good, but you got to be fair.
Well, unlike that 4-unit that I helped you sell, is there a property you ever purchased and regret selling?
In the beginning, I thought accumulation theory, buy, never sell. So I bought single family homes, I bought duplexes, I bought fourplexes, and I was like, okay, just keep making money, pay these down, let the tenants pay down the mortgages because those are single family homes. Single family homes are valued based on comparable sales. Multifamily homes are valued based on NOI. NOI is net operating income minus expenses. NOI divided by the cap rate is my valuation. We're not flippers. We didn't like buy a $100,000 house, put 30 grand into it. Now it's worth 300. I just bought decent properties, fixed them up a little bit, and rode a wave of appreciation. Then I kind of did the math and I looked at, if I keep going this way, it's going to be really slow. With the rate of inflation today, like it just doesn't really add up. Once I bought my first 7-unit, which was $660,000 back in 2021, rents were like $700. Units were severely outdated. Expenses were stupidly high. We fixed up the units. We just took the cash flow, reinvested back in the property, took rents from $700 to $1,100, which was the market rent for those fixed up units, cut the expenses down. That property appraised for $1 million the next year. I pulled out $250,000 tax free from it. That's when I was like, forget all this single family stuff. Sell it, utilize the laws and the strategies which say you don't pay capital gains when you sell real estate, just go buy more real estate. The US government says we want real estate investors. Keep investing in real estate. Sell it, make a profit, go buy more housing. Once I learned that, I then realized I could get to my goals faster by viewing every piece of my portfolio as a tool, not as like, oh, I love this property, I'll never sell it. Because if I can sell 4 and buy 12, my net worth grows, my cash flow goes, my assets grow. That's my advice. Once I maximize the value on a property, can I sell it and get something bigger and do it again and just rinse and repeat? If I can do that, I'll trade up all day.
That brings up a good point too. Like I believe in leverage. I don't want to just sit on a 30-year mortgage and wait for it to be paid off. I believe putting down 20%, leveraging 80%, and you try to make the cash flow payments, right? You raise rents, make the property more valuable. What do you say to people that are afraid to go get their credit checked or that are afraid to borrow money and leverage themselves to buy these properties?
You don't fear the debt when you trust the asset. When I know the asset is going to pay off the debt, pay me, pay all the bills, no one would fear taking money to do that. You can't get ahead today without debt. Unless you are born with money and mom and dad are like writing your checks for you. I don't have that. You don't have that. Nick doesn't have that. If you have that, God bless you. Don't be stupid. Use it to your advantage. Build a great empire. I'm here building the first generation of wealth for my bloodline. I didn't have money to go to college, so I borrowed money. When you lack resources, you have to get resourceful. See, people fear debt because they just don't want to get resourceful. They get scared. And then the cop out is, well, I don't have the money, so I can't do it. Like so many people your age, like, I want coaching, I want mentorship, but I don't have the money. Dude, neither did I. But you know who had my money? American Express. Got a registered dietitian credential. That made me millions of dollars. I didn't have money for mentorship. American Express had my money. Hired Badger's Coolian. That turned into a multi-million-dollar business. Was that worth it? Yeah. I didn't have $660,000 to buy my first apartment. But I had $132,000 from that business to put down and Team One Credit Union funded the rest. That $132,000 turned into $250,000 a year later. Was that worth it? Right. What's the return on investment for $132,000 turning to $250,000 versus $660,000 if you bought it in all cash, turning into $250,000? Way different. People who don't use leverage reduce their returns, and they think it's safer. I would argue it's riskier because now you have all your money tied up in this one deal. So if something goes wrong there, all your money is tied up there. The bank wants liquidity, dude. That means money market account, stock market account, 401k, yes and no, and cash. So if all your money's in equity, and this is straight from a lender, they told me they had a guy owned 20 properties paid off, had zero money in the bank. They said you would be better off if you had debt on all that and money in the bank, because they know if the debt is covered by the cash flow, it's a wash. It's a positive wash in your favor. People who fear debt don't understand it. We fear what we don't understand. The United States economy is in debt. Yeah. Why are we trillions of dollars in debt? Why does Apple Computers, who makes billions of dollars a year in revenue, why do they have so much debt? Why? Because leverage. That's the way it works. And you're reducing your returns by buying in all cash.
How long does it take you to look at a deal, identify and recognize, hey, I'm interested, or hey, this doesn't make sense for me?
Great question. 5 minutes. We've done a video on here, how to underwrite a deal. So let's just say it's a 10-unit apartment. I'm just gonna use arbitrary figures here. Let's say it makes $100,000 a year in income. So you should be able to say, how much is it making monthly? Annualize it out. So let's say whatever, it's $8,333 a month, $100,000 a year. Apartments, rule of thumb, 50% expense ratio. Now, if you're a really good operator and it's a smaller deal, could you maybe run it at 40, 35%? Absolutely. But just use 50% expense ratio for a worst case number. So I got $100,000 times 0.5. So that includes your vacancy, that includes your maintenance, that includes all your stuff. So let's say 50,000 is my net operating income. If I just estimate the cap rate, which a broker should be able to tell you what the cap rate is, let's just say it's a 7% cap rate divided by 0.07. That deal on paper today is worth $714,000. Now in today's market, especially in Metro Detroit, Michigan, where there's way more demand than supply, are you going to buy that for $714,000? Probably not. They're probably asking $1.4 million for it. It's worth this today. I've never bought a deal on what it's worth today. I've always bought it somewhere between what it's worth today, what it can be worth, and where can I buy it at. This deal was not worth what we paid for it day one. No freaking way. But what did I say? We paid under $15 million for it. It'll be worth over $20 million. Am I going to do that deal? Of course. So you need to then decide, okay, let's say I get the gross income up to $150,000. I can do that. 50% expense ratio, right? My NOI is now worth $75,000 divided by 7%, 0.07 cap rate. This deal is now worth $1 million. Will I pay $850 for that? Only you can decide that. Dude, when I bought that first deal, it wasn't worth $660. It was worth like $400,000. A year later, worth $1 million. My 16 unit paid $1.4 million. It wasn't worth $1.4 million. Just reappraised, just shy of $2.1 million. We all overpay. Just how much are you willing to overpay, and don't over leverage yourself. So guys, first off, thank you to Evan for being here. Hopefully this was insightful. I think we bridged a lot of gaps here and really gave some reality of investing and owning real estate. If you want to see more content like this type, let us know. Leave a comment below. Till next time, thank you guys so much for being here. Talk soon.